Welcome to Trading Lounge and the Bitcoin Ethereum report for Saturday the 5th of June. And starting with Ethereum here on the daily chart, we're looking from wave A to wave B and then moving up to wave C. So we've had this pullback, so we need to investigate that and try to figure out where we are within this particular space. So let's do that. On the 4-hour chart, just drilling in here, my first reaction is that that we have an impulse wave up off the low here as 1, 2, 3, 4, 5, and they all count internally spot on. We've got our little indicator down the bottom here, the stochastics. We can also see the move down through here was on lower volume, so that's helpful. That's divergence, and we've got our little indicator here on the 4-hour chart, so it's been working quite well, the stochastics with the dips. So before we get too excited, there's still a few other little points that I need to make obvious. But just to say, if this is correct here, it becomes really interesting, because if this count is correct, then wave 3 is going to be longer than wave 1, and then there'll be wave 4, and then there'll be wave 5. So there's a really good case that this market can climb a lot higher based on this, but we need to confirm this. So let's go in and have a look at the other options here, because one of the first things that spring to mind is that, well, if you've got 5 waves there, Pete, why don't we just put wave C there? So we have the A, the B, and the C wave to this point, and that's the end of it, and we just come down from this point. So that's just as valid as well. So we really need to come into here and understand what's going on in here a little bit further now that we've looked at those two situations. So let's do that. So on the hourly chart here, we can take these out. We've been stopped out of our trade here. And so as I just mentioned, we could view this as wave C coming up here. That's just as valid. We do have a nice 5 waves here as well. There's no overlap and everything is fine. And that's also the same for the crypto index as well. So it's, you know, we've got a nice 1, 2, 3, 4, 5 here for that. So this is also possible, you know, there's possibilities here as well. On the Bitcoin one though, we do have an overlap. Oops, today's, I didn't mean to do that. On the Bitcoin, we have an overlap between the low of wave 4 and the low of wave and the top of wave 1 here for that. So we need to note that. So just coming back to here for a moment, this here, we need to understand this move here. All of this is fine. We've got 5 waves, 3 waves, 5 waves, 3 waves, and 5 waves here for this. Now, I originally had this count, but I removed it because of Bitcoin having an overlap of the top of wave 1 there. So maybe that's a lesson that we could learn within all of this, that, well, Bitcoin can have, see how it's overlapped here on wave 1. So, yeah, we'll see the outcome of that. But, you know, it's good to note these things because they become little sort of DNA fingerprints, footprints of a personality of particular markets. So yeah, anyway, just note that. So we need to understand this further. Let's go to our famous tick chart. We'll go to 100 ticks. That should do the job. If not, we'll go smaller. Okay. So we don't need to go over this 1, 2, 3, 4, 5. We've been over that in different ways, so we're quite comfortable with impulse waves and all of those. And then what we could do here is just start to label this here. So sorry I didn't do the labeling before, but it's Saturday morning. I don't normally do videos. Got to have some time off, so we just put this here, and this down here, and let's just borrow these for the time being, shall we? Let's take these across here, and that will give us a beautiful ABC correction coming down here with 5 waves in the C wave here. So we've got wave A here, wave B here, and a nice wave B too. See how big it is? It kind of like takes it away from being a wave 2, so there's more of a bias for this particular move being correct. The other point here that we need to note is that, yes, we've got 5 waves in here, we've got 5 waves in here. This one's a bit dodgy, but that's definitely a corrective pattern. So that all fits really nice. But what happens if, you know, looking at both sides of the coin now, what happens if this is actually a wave 2 here? That's wave 1 and 2 here and 3 here, and 2, 3, and wave 4 here for this. So that means that if it's going to be a wave 4, if it's going to be a wave 4, then we'd be looking at a 38.2% retracement level, which is this top here, or the wave 4 of 1 lesser degree. But we've moved past that. But it's 50% is okay, because it just, you know, as a market moves up and down, and if it's got history there, well, it's got memory, and it, because of the volume, and, you know, it will play out that part. So we can see this first reaction here in line with this consolidation, and then we've got this reaction in line with this consolidation. So they're just normal consolidation places, and they just tend to happen on the levels. So we're working with group 2 here, 65, 72 and 80, coming up here 65, 72 and 80 in regards to the trading levels, which is just something I concocted good few years ago, a support and resistance, which is just Fibonacci as a price relationship on the side here, price ratio. So it does help with Elliott Wave, because it just brings in a, you know, I've seen the best, you know, Elliott Wave traders, and they find it difficult to make money as well, just purely using Elliott. Now, you know, there's been some fantastic ones, of course, but for most of us, it's just good to have another little tool or two, and, you know, until you can say to yourself that, you know, you consistently make money. And I've just used support and resistance, just using the closest largest number. And this is a nice little classic trading levels pattern here. That's not a setup, it's just a 38.2%. But what I'm looking for here, though, is that it's quite clear that this is wave 1 or wave A. So because we're talking about corrections here at the moment, we'll look at wave A and B, and then this would need to be wave C up here for this. So yes, we have gone past the 38.2% for the wave 4, so that's kind of good news. So that may not be that. But what happens if this is down for 1 and back for 2, and this is down for 1 and back for 2 again here for this? So it's not looking like wave 4. So we'll come back to here again, because just got to look at all the possibilities. And, you know, I don't really need to do this, but I think I need to do it because of folks need to know the whole picture, you know. So in this case here, we could probably count this here. Let's have a little look at this. Be 1 and 2 in here, and then 1, 2, 3, 4 and 5 here. So we've got wave 1 and 2 here, and then we've got 1, 2, 3, 4, and we've got 1, 2, 3, 4, 5. So we've got well, let's just give this a rough count, shall we? We'll just, oh, it's not that one I want. This one. So we'll just give that wave 1 and wave 2 there, just so we've got some sort of bearing. And we know we've got 1, 2, 3, 4 and 5 up here, so we could make that a 3rd wave there, and we could make that a 4th wave there. And that looks pretty good for a 5th wave there, really, doesn't it? And then we've got this correction here. So it looks like we're going to be going higher than the ABC. Have I made a mistake and there's just one more little high in here, because this makes a nice sort of wave 4 here? Or are we building higher in all of that? I could change that to 1, 2, 3, 4, 5 to here. We can just check out that. Bit of an overlap just in here on these two. Wave 3 is too small here really to do it like that. But as 1, 2, 3, 4 and 5 here, still get the same result, so that's no good. So I'll go back to my original thing. So it looks like we're going, unless this is 1 and 2 here and 3 and ABC for 4 here, and we've got 5 sitting here at the 61.8% mark. because I don't see 5 waves in this little move here. They're probably there, but as 1 and 2 here and 3 here. But this is a really big wave 4, isn't it? It's kind of like, oh, I don't know about that. Yeah, anyway, this looks corrective. This here is also corrective as well. So we may come down here further for this, may get a bit uglier here. But anyway, we're at the top there somewhere. So we could say that, well, if we got support on the 50-60% area here, say the 2720, the 272. So normally what I find is that 72 is a strong number, but when you get 772 or 272 together, it just carries a little bit more weight. So just worth noting, I don't know why that is, but if we do get a tested support on this move here, then we'll be going higher at that point. Then we'll be on the right track. And of course, we'll need to label this one wave 1 here and wave 2 here for that. So all in all, just to gather all the facts, is that this is the 50-60% retracement level. It looks like we've moved past wave 4. I don't think this is a wave 2 here, because the size of wave B here compared to wave 1 here is just really quite big. It's not unusual, but then that would make wave, if that was 1 and 2 here and then 3 and 4 here, then wave 4 would be really simple and small, because this one was complicated. The guideline of alternation has simple, complex, simple, or simple, complex, and more complex. So they're always rotating as such. So I'm thinking this is looking pretty good for the bullish count, but it's not over just yet. So what we could do is we could say, well, if the market makes another low down here below here, then basically we're screwed, right? We're going to be going lower at that point. If we get support on this area through here, then we're going to be heading higher at that point. Okay, so the weekend's going to sort this out, and at least you know the basic patterns. So my job is to deliver the patterns, and that's what I'm doing. And I feel pretty confident about this because we got 5 waves here, but well, it still brings it back to that triangle pattern too, doesn't it? So just coming back to the hourly chart. Here for a moment, just to rehash this a little bit. So it looks good here. This is getting a bit high for a wave 4 here, so it makes this wave 1 and 2 look good, but we can't, because it's in 5 waves here, we can't say that it's you know, this ABC pattern here close to the 50% level here may be it, you know, and we go down from that point. But I can say that, well, technically, once we take out that top, then that would be, you know, that would be the long trade from there. That would be the safe long trade. But you can see the importance of this 72 coming through here. So you could say that if that became the support this time, well, then you've got your little sort of head and shoulder thing happening here, or your cup and handle, and whatever you guys in the US call these chart patterns. But yeah, it's the balance. I can see that the weight, the shift would be the balance of the market is pushed to the upside once 72 becomes the support here. And there will be a bit of a classic trading levels pattern, because if that's corrective here, then we'll get that little push up there. And then there'll be that first high above the level type of thing, you know. So it'll be something like this, but taking out those highs there, and then you'll be on your. We'll be back on track. We've been flicked out, but we'll be back on track. So basically, talking about being long here again, and you need to keep your stop under here for that. So Bitcoin is the same as well. So in a nutshell, if this low gets taken out here, then we're going to be going lower at that point, and then we'll have to bring wave C in over here for that. This has got the exact same pattern. So if we go to the tick chart to check, so from the low, we can, from this low, we know with 5 waves in here and here and here, I've done all my homework here, the market's pulled back to the 61.8% mark, and the fact that it has pulled back to the 61.8% mark in 3 waves, that's very promising. Like if it had 5 waves to the box, then I know we'd be doomed at that point and would be going lower. So once again, we're in group 2 here, and you can see that this 37,200, which I call 72, is also in the same sort of head and shoulder sort of patterns as well. So you could see that it's, you know, this would be the balance in this area here. This 72 this 37,200 really comes down to the balance line here, doesn't it? You know, we could call it a balance line. So that as support would be, you know, would be fantastic for the upside. Will we get it? Well, first of all, I can see this pattern here is in 3 waves, so that's corrective. So that means that we'll be making a new high above here. And if we're making a new high above here, we'll have a retest of that, and then we'll be up from that point. So you can go long again at that point. We can look at this being impulsive. Just need to focus on that a little bit. I just want to have a look at a few other things first. So this top of this B wave down here, because if we were looking at this as wave 3 coming down here, and there's a good case for that too, of course, 1, 2, 3, and then this would be wave 4 sitting right here for this. So as wave 4, we know that we're going to get one more high here. So if I put that wave 4 on top here, which is on top of the 50%, so we're kind of way beyond the 38.2%. So getting support on top of 50% on the 37,500, that would be the place to also move into as well. So if you're going to move in earlier, then 37,500 is where you would add to that. There is this block over here, so that block is going to show up. If I just get that, that's going to show up over here. Well, that's the 50 and 60% retracement level there. Anyway, so everything fits, and coming up to so the levels coming up here as well from, say, from 35 here, we've got, well, the next number, it's from 35, from 5, the next number is 8. So that 8 is where it's about as well. So really, the market, this one hasn't moved up as much because we know Bitcoin's a bit lazy at the moment. And so it's at its 38.2% retracement level. We can see it's going to make a new high, so that's going to pull it out from that point. So the other side of the coin here is to look at this as wave 1 here and coming back for wave 2 here. Now, I don't think it's the case based on the large wave B here. When I say I mean it's small, but when you compare it to this here, then it's much, in time it's a lot more interesting. This looks like it's got 3 waves down here, which is a bit unusual for a wave 2 here, because it should be 5 waves. So maybe it comes down to here's a truncated 5th. I'm not quite sure, but anyway, look, that's the main point with everything, guys. And so you know that if this gets taken out, then we're going to be bearish from that point, and otherwise it's just building on on here. For this one here, the safe trade would be at 38, being support on the 38. Just have another little look in here just to see this. Yeah, that looks like 5 waves from there to there, actually. So we could look at this as... Sorry, I didn't count it. I just viewed it. But that would be 1 and 2 in here, right? And then all of this would be the 3rd, the 4th, and the 5th here. So this would give us... Just got to check on this. It's all in the detail. Yeah, I was just wondering then if this is actually 1 and 2 here, and 3 and 4 and 5 to here for this. Anyway, a little bit ugly. I have to sort it out. But you know your levels now anyway. So you could possibly go long on top of the 72 with the classic trading levels pattern, which would look like this. So if this was 72, then the arrival, the reaction, the first high above the level, the ABC pattern, noting that high there, and then the second high, then you may be able to get a better entry in over here. So that with a tight stop, and then also looking to do the same thing up here at 38. There might be a bigger sell-off here for this, so just be a bit careful about that. We call 8 a profit-taking number. But yeah, if it eventually gets support, you know what to do. So anyway, just wrapping up here, you know that's doom and gloom, and this one is prosperity. I'll leave it at that, and thanks for tuning in. Cheers.